Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what my expectations are for the next couple of days. Now as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe. If you tap the bell, select all the notifications, you will not miss another video update. And if you haven't joined us in Discord, you are missing a trick. You should check it out. Link is in the description down below. So fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out. Let's jump right down into today's video, kicking things off with that 1 hour time frame. So here we have Bitcoin paired up with USDT, 1 hour chart, and Binance is of course our data source for this one here. Now as you can kind of see, we were talking about yesterday a potential for a triangle pattern within the Bitcoin price action, with our fifth wave targeting out 35,790 to $36,638. Okay, that hasn't really changed. The only thing that potentially is on the horizon here is a slight different structure that is, or a different place within our triangle that we were looking at. Okay, so initially we're kind of thinking to ourselves that we have an A, B, C, small d, and down here for an E. However, it's possible that we are actually doing something slightly different, which is an A wave here, B wave, a C wave is where we completed. We're now up into the D wave, and then we're going to come down into the E wave. And the E wave can, of course, be unpredictable before we get a rally on upwards. So it basically means that we might find ourselves in this ranging market all weekend long before we actually get up to our target range of 35,790. So we want to be a little bit cautious on that. If we have completed the E wave, then this little move here will have a small retracement to it. So we'll end up with a little kind of wave one situation here. We'll pull back a little ways for a wave two, and then we'll rally on up, and we'll kind of have these next couple of big waves and with big structures that take us up a little bit higher into our final structured high at 35,790, right? Okay, so that's kind of one of the things we're going to be keeping a close eye on here. At the moment, it looks like we're getting rejected on the equilibrium area, but also the 50 SMA, with chances are we'll probably lose the 50 EMA on this journey as well. We're up in the overbought range. I am looking for a very small correction here to the downside so that we could potentially go long if we wanted to. So for anyone who was kind of following along yesterday, I did manage to get into a long position somewhere around here. Stop loss obviously below the recent swing low, and obviously TP up here a little bit higher. Now I've adjusted this. I've actually exited that position, and I will be looking for a new entry, and I'll be looking at a little bit lower here. So I locked in those profits that have already been made. Again, stop loss below the swing low. Target still up in the high range, but we'll get a better R&R, risk reward ratio. And of course, we'll be making more money because we're coming in and out of the trade in all of those different waves. Now, of course, if I am to be trading, I am going to be using my go-to platform at the moment, which is BitGet. There is an affiliate link in the description below if you haven't yet signed up for BitGet or any of the other exchanges listed below. I do encourage you guys to check them out, but obviously do understand the risks that are involved in trading cryptocurrencies. Only risk investing what you can afford to lose, and make the assumption essentially that you are going to lose that funding, lose that money. At least then you go into this knowing that you're, if you're going to make anything, it's going to be fantastic, it's great, but your expectations are that you lose the funds, right? So if you go in with an open mind like that, don't risk more than you're willing to lose, all that kind of usual stuff that you hear everyone talk about. But if you do use those links in the below, I do think it's a great way to get yourself set up ready for the future. Obviously, many different platforms. I use BitGet as my go-to platform, but we also have in the description down below things like Bybit, OKX, MEXC, and so many others. So why not check them out? Get yourself registered on all of the different accounts, because it will set yourself up for success later down the line in the bullish market when you're trying to exit your positions. It's best to have access to as many of these exchanges as you possibly can, and not just relying on one or two. Basically, just get yourself registered absolutely everywhere. Do what you need to do in terms of KYC if that is applicable to you. So if I'm to trade it, I'm going to be trading on BitGet. So you'll end up with slightly different numbers, but apply the analysis in the same way. Obviously, I think the swing low is a different price on BitGet than it is here on Binance, for example. Okay, so when we take a look at Binance here from spot positions, then of course, we can see appreciation here towards 35,780 or 790 or 789 to be more specific. So we are looking for that move to the upside. The only question is whether or not we've completed this triangle in its E wave or whether or not we're just in the D wave right now. And more time will let us know where we sit with that one. Take this out into the daily time frame. You can obviously see that we've had this great move to the upside. My expectations are that we still have a little bit more to the upside before we start to see the move downwards. My expectation is, of course, that we are looking for a nice healthy correction. Now we've taken out the $34,000 to $35,000 CME gap, which if I go over to my futures chart here, you can see this was the gap right up here. We've taken it out. The next one, of course, is down here at 20,330 to 21,110. That's going to be a long drop. It's not something that's going to happen instantaneously. I think it's approximately 40 or so percent. If I take the current positioning down there, it's actually 37. If we take the high position from where we were, it's 40% reduction in price. Now, 40% reduction, people will be thinking, nah, that's not going to happen. You can't possibly see a 40% reduction. I'm just going to go ahead and show you where we were in the 2019 initial rally upwards with the initial pullback before the pandemic crash. Okay, the initial pullback for Bitcoin was 54.69%. That was the healthy correction that was required after rallying on up the way that it did. Bitcoin moved up here a total of 354% and had a healthy correction of 54%. Okay, we've seen so far a bit of a move to the upside. Since the low of November 2022, we've moved up 136%, and a 40% reduction wouldn't be uncommon. Okay, so we have to appreciate the fact that, things do not just move up in straight lines. This move down to the $20,000 CME gap would be a very healthy one. And so when I take a look at the price chart, we've either got two options here. We have started the bull market for Bitcoin, not for the altcoins, but for Bitcoin here. We started the initial run up. We have the healthy correction, and then we rally up into the real big bullish parabolic moves. Alternatively, of course, we'd be bearish on this a little bit longer, and we have ourselves a three-wave pattern into new bear market low points. And of course, guys, there is another CME gap down here at 9,735 to 9,925. Okay, I'll leave it up to you guys as to kind of how you want to feel on this one. Personally, I'm waiting to see how price reacts at this CME gap at 20,000 to 21,000 before even thinking or kind of contemplating the potential moves down to sub $10,000 Bitcoin. Ultimately, things are looking pretty good for Bitcoin at the moment, but there's a lot of things in the macro and in the real world that could, of course, spook the markets quite badly. That could lead us down into those horrific lows that I guess a lot of bears are looking for. And that is a huge opportunity in Bitcoin's price moving down to that kind of level, but it will wreck a lot of retail investors at the same time. So just make sure you position yourselves with whatever you believe. Obviously, these are just my thoughts and opinions on the data in the charts as I personally see it, and it's entirely up to you how you kind of perceive this, or whether you just kind of think that this is just entertainment purposes, which is kind of why I create it in the first place. Bearing in mind, I'm not a financial advisor and I cannot offer you financial advice. Moving over into the weekly, you can see that we're almost touching on the overbought range on the Bitstamp USD pairing. Okay, this is basically a bearish place to be. And one of the things I would say is that this could be a big bull trap at the moment, where we have seen higher highs and higher lows here for a little while. Ultimately, could be indicative of a big move to the downside coming. Now, when we take a look at the volume profiles here, you can see just how non-existent those profiles have been through 2023, specifically where we are right now. The bull market volumes are significantly higher than where we are right now. And if we take a look at this, just bring this back down to the bear market low of 2018, you can see the initial push to the upside has significantly higher volumes than what we're seeing right now. So the volume profiles that we see here for Bitcoin on the USDT or USD pairings are very much an indication of bear market territory, not bull market territory. So we want to be a little bit aware of that. Now, we do have our two curved lines here, and if we do tap on this lower range, we are talking about $13,000 Bitcoin. So again, there's still something that we have to kind of contend with as well. Ultimately, I am looking for that healthy correction to the downside, even though there's a potential golden cross here in the coming weeks on Bitcoin's weekly USD pairing on Bitstamp. So it's going to be interesting to kind of see how all of this plays out. My expectation is, though, a bit of a red end to the year where we do push back down. We see $20,000 and then we can really launch next year in a strong way. Alternatively, of course, we just range sideways until the Fed pivot. The Fed pivot causes mass sell-off effect within the stock market and has a ripple effect onto Bitcoin. And we do see Bitcoin pull back down to 20K through the pivot event. If that is the case, then that's actually going to set us up much stronger further down the line. I'd rather have the Fed pivot as the catalyst for the move to the downside than anything else, because if the Fed pivot doesn't cause the next push to the downside, we hit 20K without a pivot, then I'm going to be a little bit more bearish, thinking that Bitcoin has further to the downside to go. So ultimately, that's kind of it for now. I think what we'll do is we'll do another update on Bitcoin tomorrow morning, talk about where the weekly close positions are and all that kind of good stuff, and any latest kind of structural movements for Bitcoin. But for now, I think that's going to be this video all wrapped up. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.